Click the bell icon to get latest videos from Ekeeda.
Hello friends, when partner becomes insolvent, firm is required to be dissolved. We are going to discuss now one question where one partner has become insolvent and partner's current accounts are given. It means firm is following fixed capital method. How to solve this sum? Let us understand now. Let us go through the question. Sun, moon and star were equal partners. So profit sharing ratio is 1:1:1. Their financial position as on 31st March 2011 was as under. Balance sheet. Let us start with asset side. Current account of star 13,000. His current account is showing debit balance. That means amount receivable from him is rupees 13,000. This will be transferred to his capital account, debit side. Premises, this will be transferred to realization account, debit side, RD. Machinery, realization account, debit side, RD. Debtors, realization account, debit side, gross amount 11,000, RD. RDD 200. This will be transferred to realization account, credit side. Furniture, RD, realization account, debit side. Profit and loss account. This is loss as it is there on asset side. This loss 6,000 will be divided among partners in their profit sharing ratio. It will be debited to partner's capital account. Cash. This will be transferred to separate account. Let us discuss liability side. Capital account of sun, moon, star. It will be transferred to the credit of their capital accounts. Current account of sun and moon. These are appearing on liability side, so they have credit balance. It will be transferred to their capital accounts. Sundry creditors, realization account, credit. Bills payable, realization account, credit. On the above date, they decided to dissolve the partnership firm, and the result of realization was as under. Sun to take over premises at an agreed value of rupees 5,000. So Sun account will be debited, realization account will be credited for 5,000. Premises are of 9,800 book value. It is taken over by Sun for 5,000. Here loss should not be separately recorded as it get adjusted in realization account. Machinery realized at 80% of book value. Machinery is having book value here 8,500. 80% means we got 6,800. This will have one effect, cash account debit realization account credit. Next, debtors 8,300. Cash debit, realization credit. Furniture was given away free of charge to the office boy. Here we have not realized anything. Here we have not received any cash. This is like gift given by firm to office boy. So there will be no entry for this. Sundry creditors were paid rupees 4,100 in full satisfaction of their claims. Here it will be recorded to the credit of cash account and to the debit of realization account. Whereas bills payable were discharged by son at rupees 1,000 in full settlement. It means liability of bills payable is taken over by partner's son. Here son will be credited and realization account will be debited. Realization expenses amounted to rupees 1,000 which were met by son. Again here son will be credited and realization account will be debited. Star becomes insolvent and rupees 7,000 could be recovered from his private estate. So this 7,000 is received cash account debit, Star's capital account credit. Give necessary ledger accounts to close books of the firm. In this question, they have given partner's capital account as well as current account. We can open partner's current account and we'll do all adjustments in partner's current account, and finally we can close that partner's current account and balance will be transferred to partner's capital account. That is the one option we have. Other option is we'll open partner's capital account and partner's current account existing balances will be transferred to partner's capital account and all adjustments will be done through partner's capital account. Both the options are correct. We can name it as a combined partner's capital and current account. Here we are going by second option. We'll open partner's capital account and all current account balances will transfer to partner's capital account. In question, suppose they ask us to prepare and show current account separately, then all adjustments we are required to do in partner's current account and finally it will be closed and transferred to partner's capital account. Let us start now. First step of solving problem is called as transfer step. All amounts given in balance sheet will be transferred to one or other account. Let us start with asset side. Premises, machinery, debtors gross, furniture will be transferred to the debit of realization account. realization account debit side to sundry assets, premises, machinery, debtors, furniture. Total book value 30,200. RDD 200 will be transferred to the credit of realization account. Realization account credit by RDD account 200. Current account of star 13,000. This is shown on asset side. It means it has got debit balance. This will be transferred to the capital of star on debit side. Partners current account star debit side to current account 13,000. Profit and loss account 6,000. This is loss shown on asset side. It will be divided equally among all partners. This will be recorded on debit side of partners capital account. Partners capital account debit to profit and loss account, equal ratio 1:1:1. So sun 2000, moon 2000, star 2000. Cash 1000. This will be transferred to cash account on debit side. Cash bank account debit side to balance brought down 1000. Asset side is transferred. Let us move to liability side. Capital of sun, moon, star will be transferred to the credit of partners capital account. By balance brought down sun 20,000, moon 16,000, star 1,000. Current account of sun and moon, they are having credit balance. It will be transferred to the credit of their capital account. Partners capital account credit side by current account sun 2000, moon 1000. Liability side, last two liabilities creditors and bills payable will be transferred to realization account on credit side. By sundry liabilities creditors 8,000, bills payable 2,000, total is 10,000. On the above date they decided to dissolve the partnership firm and the result of realization were as under. Sun to take over premises at an agreed value of rupees 5,000. This will be debited to Sun's capital account and credited to realization account. Realization account credit side by son's capital account, premises taken 5,000. Partner's capital account, debit side, partner's capital account, debit son to realization account for premises taken 5,000. Machinery realized at 80% of book value. Machinery is here 8,500 book value. 80% means we have received 6,800. Debtors at 8,300. So these two assets are realized. So cash is received. So this will be debited to cash bank account and credited to realization account. Cash bank account debit side to realization account. Machinery realized 6,800, debtors 8,300, total 15,100. Realization account credit side, by cash bank, machinery sold, debtors realized, total amount 15,100. Furniture was given away free of charge to the office boy. This is like gift given by partnership firm to one of their employee office boy. So there is no any realization of amount from furniture. So there will be no entry for this particular transaction. Sundry creditors were paid rupees 4,100 in full satisfaction of their claims. This will be credited to cash bank account and debited to a realization account. Realization account debit to cash bank, creditors settled 4,100. Cash bank account credit side, by realization account for creditors paid 4,100. Bills payable were discharged by son at rupees 1,000 in full settlement. That means liability bills payable is taken over by son. This will be credited to son's capital account and debited to realization account. Realization account debit side to son's capital account for bills payable taken over 1,000. Partners capital account credit by realization account Sun for bills payable taken over 1000. Realization expenses amounted to 1000 were met by Sun, that is paid by Sun. Sun's capital account will be credited and realization account will be debited. Realization account debit to Sun's capital account for realization expenses paid 1000. Partners capital account credit Sun by realization account for expenses paid 1000. Star becomes insolvent and rupees 7000 could be recovered from his private estate. This is the amount received from private estate of Star in court proceedings of insolvency. Amount is received, cash account will be debited and Star's capital account will be credited. Partners capital account credit Star by cash bank 7000. Recovered from private estate. This will have second effect in cash bank account debit side. Cash bank account debit side to Star's capital account recovered from private estate 7000. We have given effect to all adjustment. Let us close now ledger. As far as closing is considered, it will be same like other problems where there is no insolvency. A realization account will be closed and profit and loss will be transferred to partner's capital account. Debit total of realization account 36,300, which is higher than credit total. There is balancing figure of 6,000. It means there is realization loss of rupees 6,000. This loss will be divided among partners in their profit sharing ratio, that is equal. This loss 6,000 will be divided between partners in equal ratio. Sun 2000, Moon 2000, Star 2000. This loss will be transferred to partner's capital account on debit side. Partner's capital account debit to realization account loss transferred 2000, 2000, 2000. Here we are required to focus on procedure of insolvency. We are required to take first Star's capital account for closing to find out any deficiency. नको रे एवढी हालचाल करू सारखी डिस्टर्ब होतं. एकदाच काय ते हलून घे.
सर मी एक स्टेप हे वापरणार होतो पण तसं झाला नाही.
चादर बिदर असेल कुठे पण पडलेली असेल
ते काय राहिलंय सर.
Star debit total is 17,000. This is higher than credit total. We can find out the difference. Debit 17,000, credit 8,000. So there is deficiency shortage of 9,000. This deficiency of insolvent partner's capital account is required to be shared by solvent partner in profit sharing ratio as per the provisions of Indian Partnership Act 1932. So your 9,000 will be divided among solvent partners sun and moon in equal ratio. So 9,000 it will be divided between sun and moon 4,500 each. It means sun and moon's capital will be debited and star's capital will be credited. Partner's capital account debit to star's capital account. Sun 4,500, moon 4,500. Partner's capital account debit to star's capital, sun 4,500, moon 4,500. Credit side, by sun's capital account, star column 4,500. By moon's capital account, star column 4,500. At this point, star's capital account is closed. Debit as well as credit 17,000. Now we'll close sun and moon's capital account in the usual way. It means we have to close their accounts and transfer balance to cash bank account. Partner's capital account debit sun to cash bank 10,500, moon 8,500. Both the capital accounts are showing balancing figure on debit side. Cash bank account credit by capital account of sun, moon, total amount is 19,000. It means these are the amounts paid to partners in final settlement. Now we can close cash bank account which should tally. Cash bank account is tallying debit as well as credit total is 23,100. It means we have solved all our ledgers correctly. Cash bank account is tallying. In this question, we have learned how to do ledger accounts where firm is following fixed capital method. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.